Good afternoon. I'm Natalie Prevotera, Acting CEO of NGS Super, and I'm pleased to welcome you to NGS Super's 2022 Annual Members Meeting. Unfortunately, our Chair, Dr. Jeff Newcomb, is unwell and won't be joining us today in person. However, the Chair, members of the Board and our executive team are joining us online, and I'd like to welcome them, together with our auditor from PwC, Ben Thompson, and our actuary from Mercer, Tim Jenkins. Before starting the meeting, I'd like to acknowledge the traditional custodians of the lands we are meeting on today, both here in Sydney and from wherever you're joining us. In Sydney, we're meeting on the lands of the Gadigal people of the Eora Nation. I pay my respects to elders past, present and emerging, and celebrate the diversity of First Nations peoples and their ongoing culture and connections to the lands and the waters on which we are living and meeting today. During today's meeting, I'll talk to you about the current and future focus of the fund. Our Chief Strategy Officer, Ben Facer, will provide insights on key strategic initiatives, while our Chief Investment Officer, Ben Squires, will provide a report on the financial markets and performance. During the meeting, you can ask questions by typing it into the Ask a Question box, which is underneath the video player on the screen. We'll respond to as many questions as we can in the allocated time, as well as those received by email before the meeting. All questions and answers, as well as a recording of this meeting, will be on the NGS website by Friday, 28th of April. Please note that we can't answer any questions that relate to your personal circumstances. It's important that I begin by saying that we genuinely apologise to all of our members impacted by the recent cyber incident. We're working hard with experts to assess the impact. We're confident we know the source of the breach, and we're taking the necessary steps and more to secure our platforms further. Importantly, we're also doing everything we can to support those impacted. NGS is partnering with ID Care, Australia's national identity and cyber support community service. ID Care's services come at no cost to individuals, and they will work with those impacted to address concerns in relation to personal information. We are communicating directly with those impacted on how they can access ID Care and also other forms of support. The actions we've taken to date in relation to the incident and that we will continue to take have secured our members' superannuation savings and the fund's assets. Our ability to respond to a potential threat in a timely and efficient manner is at the core of our cybersecurity framework and allows for immediate action. Now, it's also important that I update you on a lot of the incredible work our team has been doing. I'm grateful to have this opportunity to talk to you about what we're doing and also answer any questions you might have. Following the decision in 2021 not to go ahead with a merger with Australian Catholic Super, 2022 was a year for the fund to regroup, refocus and re-energise. Reflecting upon and acting on the things that matter most to our members, personalised service and support, low-cost quality products and competitive investment performance is hardwired into the DNA of the NGS team. So focusing our energy and work into delivering this allows us to thrive as a niche fund, delivering low-cost, high-quality products and personalised service. It was reaffirming to hear Superannuation Minister observe that while there is some momentum towards larger funds, there is a place for small and medium funds that are delivering value and positive outcomes for their members. It's a position we agree with wholeheartedly, because the big end of town isn't for everyone. At NGS, we're committed to delivering low-cost, quality products with personalised service to help our members at every stage of their journey with super. We're proud of our history supporting the independent and Catholic education sectors, as well as the many members who have joined us from other sectors over our 35-year history. That history and our commitment to personalised service be that via our national team of super specialists and financial planners, or via our telephone help desk and digital tools, puts us in a unique position to draw on our history to harness new opportunities and grow and develop the fund. Our purpose is to help you and the world prepare for tomorrow. This drives everything we do, from our strategy to our investment philosophy and products, and to the support and services we offer our members. Our purpose puts you, our members, and your community at the heart of our work. Our strategy is based on helping members realise their financial goals through the products and services we offer, delivering strong financial returns to members and containing costs so we can deliver more to members. Preparing for tomorrow through industry-leading position on carbon neutrality. Now I'm going to touch on some of the ways we are delivering on our strategy around product and services. Our Chief Strategy Officer, Ben Facer, will share additional information, including how we are working to be more efficient and cost-focused, while Ben Squires, our Chief Investment Officer, will share details on our investment performance and our carbon neutral strategy. Having a strong understanding of the diverse needs of our members is especially important to us. Through our close relationship with employers, we aim to reach our members at key times to help in a meaningful and a straightforward way. We provide information and education to our members, giving you the facts and details you need to feel empowered and comfortable with the decisions you make about your super. We understand that you have unique needs and financial goals at every stage of your life, and we cater for this by providing information and simple tools like calculators and educational resources that simplify super, investments, and also insurance, so it's easier for you to make investment decisions and important decisions. I invite you to take advantage of what's available. Our dedicated team of super specialists and our financial planners are the cornerstone of the personalised services we offer. This year, our super specialists were back to face-to-face meetings with our members. We also know that some of you prefer the convenience of phone and online meetings, which are available too. Each month, NGS offers webinars and seminars which are free to members. So whether you're just starting out, or in the middle of your career, or retired, the information and tips available could help you make better financial choices. Offering our members high quality, good value products is extremely important. We were proud to receive Money Magazine's 2023 award for the Best Value Balanced Super Product at their Best of the Best Awards. This award, which is independently judged and rated by Rainmaker Research, acknowledged that NGS Super offers a high quality product that delivers strong returns at a low cost. We keep our investment fees low by actively managing assets in the portfolio and balancing risk and volatility. We invest in the best opportunities. Every asset in our portfolio is competing to be there. We also have a strong focus on ongoing business improvement and efficiency, which helps keep our administration fees low. We're incredibly proud of the Money Magazine Award, which is an independent acknowledgement for members that you are with a quality fund. In 2022, NGS passed the Australian Prudential Regulation Authority annual performance test. The test measures the performance, fees and costs of my super products and was put in place so that members can be sure their super is being responsibly managed and doing what it is designed for, building savings that will provide you with a comfortable life when you retire. You can be assured that we will always act in the best financial interests of our members. Delivering in challenging investment markets while staying focused on investments that deliver for members today and improves their world tomorrow is core to our strategy. Global tensions and international monetary policy continue to impact share market and cost of living increases across the globe. We're seeing this impact each day in the cost of our groceries, energy bills, and at the petrol buzzer. Our Chief Investment Officer, Ben Squires, will share more about what we have been and what we are doing to manage these conditions. And now, how we're constructing our portfolios to reduce their impact on performance and also on member returns. Ben will talk about the decision we made in 2022 to divest from some large fossil fuel companies. While Ben will share the detail on these decisions, I want to reassure you that our focus on sustainability does not come at the expense of investment returns. Climate change is a threat to all of us, to the planet we live on, and the futures we look forward to and plan for. The science tells us that we need to take action now. That is what we're doing, whilst always working to deliver the best possible returns. I hope that through these examples of our work, you can see that we're committed to continual improvement and finding efficiencies so we can deliver better products and services to members to help you and the world prepare for tomorrow. I'm going to hand to our Chief Strategy Officer, Ben Facer, to share more on some of our key strategic initiatives.
Thanks, Natalie, and hello to everyone for joining us today. I appreciate the opportunity to share with you what we're working on to make your experience with NGS easier. Today, I'm going to briefly talk through some of our key areas of focus, which include improving our ways of interacting with you, our administration capabilities, and our processes. We want to deliver products and personalised communications to our members that align more closely with your needs, your financial goals, and key life events. We want to remove the pain points in our existing service model, and to do this, we're working to gain a deeper understanding of how members and employers engage with us, including where our processes do and don't work, and finding any gaps in our members' journey with us. The first phase of this customer experience alignment work, which is currently underway, will help us develop a prioritised plan for improving the member experience across touchpoints like our website, our online member portal, our helpline, and interactions you have with our super specialists and financial planners. Another significant area of work which dovetails with our customer experience alignment project is the review of our administration operating model. A significant proportion of the NGS administration model is outsourced to Mercer, a highly experienced and well-known full-service provider. The current arrangement has been in place since 2018, but since that time, there have been a number of changes in the administration market, as well as technological advances, which make it appropriate for us to undertake a review and plan for a future model which balances the efficiency and accuracy required for routine processes with our desire for greater personalisation of interactions with you. The main drivers for this project are to find efficiencies and improved ways of doing things. The project, which started in the latter half of 2022 and is scheduled to be completed during 2023, is working towards recommending a service structure that will allow NGS to deliver a high-quality, tailored member experience that is balanced against member costs. NGS has become a larger and more complex organisation in recent years due to the growth in funds under management and market and regulatory expectations. In 10 years, our funds under management have grown by 200%, from $4.5 billion in 2012 to $13.8 billion in 2023. And internal staff have grown from 27 to 98 in the same period. This has meant introducing new ways of working to support staff, maintain satisfaction and retain expertise. Providing our staff with consistent technology and tools is underpinning our push to improve processes and enhance productivity. We're focusing on initiatives such as the automation of routine tasks and the use of improved technologies and processes which help us to be more efficient. Our work in this space will be ongoing as regulation, markets and technologies change, but I hope this gives you an insight of how we are working to lift productivity and manage costs within the fund. I'd now like to hand over to our Chief Investment Officer, Ben Squires, who will report on our investments. Thank you.
Thank you for taking the time to join us for the annual member meeting. In this update, I'm going to discuss the fund's investment activities with a particular emphasis on our progress towards decarbonising the portfolio by 2030. I'll reflect on the fund's performance over the year and the drivers of performance, and end with a few examples of investments that we've added to the portfolio. To start, it's worth reflecting on the difficult market environment we had to navigate in 2022. The Australian economy experienced the same challenges as those in other developed markets, with rising inflation, interest rates and energy prices, alongside supply chain disruptions and labour shortages. These all contributed to a slowing of the Australian economy and dampened consumer and business confidence. This was reflected in capital markets with greater volatility in share markets and tighter credit markets. Now, despite these challenges over the year, we continue to take a long-term approach, investing in opportunities that are anticipated to add value to members' retirement savings over the long term. We also maintained our efforts to decarbonise the portfolio by divesting companies within the oil, gas, production and exploration sector. We set our interim carbon emission reduction for the diversified option at 35% by 2025. And I'm happy to report we are well ahead of our trajectory to achieve this goal. We've made significant progress with decarbonising our portfolio and have developed proprietary modelling that is enabling NGS to identify risks and incorporate these into our portfolio construction methodology. As I mentioned, we've set our interim target of a 35% reduction in the emissions by 2025 and are now working on setting our new targets, our interim targets. We continue to focus on positive impact investments in the climate space, amongst other investments, and have made some commitments to new technologies which are helping to speed up the removal of carbon from the agricultural, manufacturing and transportation sectors. Our investments in renewable energy generation increased over the year, and this is expected to more than offset the risks associated with divestment in pipelines and gas terminals. Now, the glide path showed on the screen is a linear projection towards our net zero by 2030 target. And realistically, the decarbonisation efforts won't follow this simplistic path. However, we have set a baseline from our carbon intensity in the portfolio in 2021, with interim targets set between now and 2030. For NGS Super to be on track to reach that interim target of 35% reduction in the carbon intensity by 2025, our carbon intensity needed to be at least 43.8 tonnes of carbon dioxide and greenhouse gas equivalents per $1 million invested in 2022. However, what you can see from this graph, illustrated by the pink line, the actual carbon intensity in 2022 was 38 tonnes of carbon dioxide and greenhouse gas emissions per million invested. This represents a 20% reduction from the 2021 level and a 13% reduction ahead of required trajectory. Now, how much return would you expect to give up by saving the planet during, in particular, an energy crisis? And the very simple answer to that, looking at the Australian share market, which has a high concentration of energy companies within the index, the answer is nothing. And we illustrate that here with our portfolio returns. Now, what you can see, the pink line represents the ASX 300 index. That's the composition of all the companies within the top 300 companies within the Australian marketplace, and it contains a lot of oil and gas companies. We overlay that with our actual portfolio outcome, which is the lighter green line. And what you can see here from this chart is that the NGS portfolio has maintained outperformance relative to the index. So we've been able to divest these high-risk assets from our portfolio during an energy crisis, and we've continued to be able to outperform the index. So turning back to the economic environment, I'll now just outlay some of the key considerations impacting the likely path for capital markets. The perfect outcome for the economy is for inflation to fall back within central bank target levels without materially impacting employment conditions and growth, referred to a Goldilocks scenario. Now, there are a number of factors which contribute to this scenario playing out. For example, the consumer's savings rate. Savings rate continues to be quite high in the market, and this is a global phenomenon. Low levels of unemployment across economies and strong corporate balance sheets. These factors all contribute to this Goldilocks scenario playing out. Now, in reaction to inflation fears, central banks around the world have quickly applied the handbrake with the aim of cooling inflation and ensuring future inflation expectations remain anchored. They have clearly articulated that fighting inflation is the #1 target of central banks, and the unintended consequence of that target is lower future economic growth and rising unemployment. However, inflation has also been stoked by supply-side disruptions associated with geopolitical tensions and war, particularly as we've seen in the Ukraine, which has disrupted energy and commodity markets more generally. Now, these risks will continue to be a major concern of central banks and have an impact on their objective of meeting their inflation expectations and monetary policy. In addition, in the aftermath of the COVID-induced lockdowns and higher geopolitical tensions, we're also witnessing some unwinding of globalisation, particularly between the East and the West. Corporations have reoriented their efforts to ensure security of supply over efficiency and cost, and we see this in the form of onshoring manufacturing and high levels of inventories being held across these corporations. Now, these activities are inflationary in nature. So, recession is clearly, the risks are clearly increased, and this is one of the key outcomes of tighter monetary policy. So we need to look at the data points to get some comfort and look at the timeframes in which we expect a recession to occur. So what is the data telling us? Firstly, we can see that inflation is cooling, which is a positive sign for monetary policy easing. However, service inflation appears to be quite sticky relative to goods inflation. Goods inflation has come down quite significantly, but service inflation remains quite sticky. Oil and commodity prices pose a risk to inflation. If we see geopolitical tensions rising and war, that will give rise to heightened energy prices. The China reopening is a positive for economic growth. However, it may feed into the inflation story, so something to watch for. Unemployment is at historical low levels. We have seen strong signals of wage inflation peaking. We continue to see high job openings in the market. Margins within corporations still remain very healthy. However, the recent sell-off in technology stocks is a leading indicator of earnings recession ahead of us. So what is the Fed and the market reaction? The Fed's maintaining this more hawkish tone around higher rates for longer to really deal with that inflation issue. And they still believe, and the market to some extent still believes, that it is achievable to reach a soft landing in the economy. So cool down the growth without leading into a recession. In the history of monetary policy tightening, this is very uncommon. The market is in fact pricing in lower interest rates in the second half of this year off the back of slowing economic growth and heightened recession risk, and generally are sending signals about more optimism on risky assets. So what's NGS's take on all of this? Well, certainly the data is clear on slowing inflation and growth for 2023. The first half of the year really has been around understanding the drivers of inflation and looking for those signals to see that inflation has been coming off and monetary policy is working. The second half of the year is more about earnings growth. What's going to be the implications for companies and their earnings in the second half of this year, and how will this affect capital markets? Odds of a recession have absolutely increased, and many of the signals are flashing red at this point. However, we believe that the market is range-bound, and so we're maintaining a slightly positive view in the first half of this year. So we're staying invested in risk, however, we're adding more hedges to our portfolio. So what is a hedge? Well, it's a tool that we can use to provide protection in the event that we do see markets deteriorating. So we've increased our allocation to gold. Over the medium to long term, gold has demonstrated a clear hedge against geopolitical risk and also a great hedge against inflation and deep recession risk. We've increased the allocation to international fixed income. Bonds now act again as a diversifier, and in the case of a deep recession, the yields are more attractive on these bonds. Within our bond alternative portfolio, we've increased the duration that we have across these assets, and again, this is going to provide protection in the event of a recession. We've increased our exposure to safe haven currencies such as the US dollar. We're maintaining a higher exposure to the US dollar as part of our foreign currency exposure. And this acts as a great hedge against the continued hawkishness of the Fed and further geopolitical tension. And lastly, we've increased the frequency of rebalancing across our portfolio. So as we see profits in those particular higher risk asset classes, we're taking those profits and reinvesting those in more defensive areas across the portfolio. Now just a quick look at fund performance. And I'll firstly start by reflecting on the 30 June 2022 year, where the fund delivered a negative 3.55% return. And this is off the back of significant headwinds that we faced in capital markets. We saw international shares down in the order of 17% and Australian shares down in the order of 6%. What this chart is showing is the returns that we've generated across the sectors that we invest in for the diversified MySuper product. And what you can see from this chart is that we have a significant array of sectors in which we can invest, and these sectors provide diversification benefit to our portfolio, and they neutralise the effect of negative capital markets, such as what we've seen within the share market. To the left, you can see in the green bars the positive returning sectors. Typically, these sectors have those characteristics of stable income, such as infrastructure and real estate. And we've also seen great results from our private equity portfolio in 2022 and some other forms of alternatives. And on the right, in the pink bars, you can see the negative contribution that came through from the share market. Now, when we fast forward to February, the story really changes quite significantly. We can see those asset classes that were underperforming in 2022, namely the share market, have come back, and there's been a recovery because the market was pricing in 2022 a mild recession. So we saw significant falls in 2022, only for the data points and the economic news coming in much more positive, and we saw an improvement in the share market. However, on the other sides of our portfolio that were protecting us in 2022, those returns softened. And this is the real benefit of this diversification that we build into our portfolio, this all-weather approach. And so the characteristics that form part of all of the multi-asset class options are really mirrored here across the diversified option. In other updates, the fund continues to invest in people, and we've added 5 new team members with expertise across private equity, infrastructure, quantitative analytics, ESG and investment operations. This investment in resources has deepened our research efforts and allowed us to increase our investments in directly held assets across the portfolio, which has the benefit of both reducing fees and enhancing returns. We've automated a number of activities that were historically manual processes. This is part of a major data transformation project which will improve the efficiency of our portfolio management activities. Our portfolio is resilient to shocks, given the long-term approach we're taking and our considered work around managing stranded and physical asset risk associated with climate change. And here are some examples of how we're building resilient portfolios. In the private debt space, we've invested $162 million within the Australian marketplace, primarily across residential and industrial private debt. This portfolio to date has generated 11.2% net return and is an extremely attractive asset class in the portfolio with low loan to valuation ratios, short tenor on the debt, and often no construction or development risk. We've continued to invest in transitional-based energy exposures. And here's an example of a Californian asset. We invested $10 million in a gas peaker asset that is being converted to a hydrogen baseload power source. The targeted return for this investment is 15% and really is enabling NGS to move towards this carbon neutral by 2030 target as we see fossil fuels retired. Within the private equity space, it's an extremely attractive area for the fund to continue to invest, taking that long-term approach. The current 10-year returns of our private equity portfolio has delivered 13.5%, really attractive returns. And we continue to invest in the next solutions to global problems. We've invested in skilled fund managers, and we've also made direct investments alongside those managers, having invested $142 million to co-investments. To give some examples of some of those co-investments, we've recently invested $23.5 million across 4 of these investments with a targeted return of above 25%. Now, these are innovative companies developing new immunotherapies for tumours, microbial technologies for capturing carbon in agricultural soil, food for feeding the population of the future, and the next generation of computers such as quantum computers. Once again, thank you for joining us today, and I hand back to Natalie to answer your questions and provide closing remarks.
Thanks, Ben, for your update on our progress towards our carbon neutral strategy and your insights as well on the markets and what you expect to see. Now it's time to answer some of your questions. These will be shared between myself, Ben Facer and Ben Squires. I'll first start with a question from Lisa and Bernie. In light of recent data breaches affecting several companies, what is NGS doing regarding its security arrangements, particularly with ensuring secure access to accounts? And further, how is NGS planning to strengthen security around members' accounts? Ben, would you like to take this question?
Thanks, Natalie. The security of our systems and member data is of the highest importance to us. We're absolutely committed to safeguarding all of our members' information. Our online login employs multi-factor authentication, and it's supported by risk-based algorithms to protect our member accounts. That means you might have a different experience depending on what devices you're logging in from. Further, we constantly review our security policies and controls and work with our administrator to ensure the safest approach for our members.
Thanks, Ben. The next question's from John. Can you give me 3 good reasons for members who are transitioning to retirement not to transfer their super into a bank account savings? A bank account, essentially. Thanks, John. Now, everyone has different needs and financial goals, which is why we offer a wide range of investment options, products and services to cater for members at each stage of their journey with superannuation. So a transition to retirement strategy can help you maintain your current income and if you reduce your working hours. It can also maximise your savings for retirement by continuing to contribute to your super and potentially save tax if you continue to work full-time. So together with our low fees and flexibility in how and when you receive your income, a transition to retirement can help you ease into life after work. The next question's from George. The cost of administration of super funds in recent times is on the rise. Is NGS taking action to minimise these costs so that charges to members can be improved? Well, George, as an industry super fund, all of our profits go back to members, and delivering value to our members is at the heart of what we do. As evidence of this, we offer consistently low fees across our product range, and to keep our fees low, NGS has a focus on innovation and continuous improvement. We're proud to yet again receive a platinum rating from Super Ratings for 2023, and might I say that's the 18th consecutive year. That underscores our position as a best value for money super fund. Now, another question from George. Why does NGS Super include my member number on front of the NGS newsletter? Thanks for the question, George. It's really important that all of our members are cyber aware. The NGS member number is included in NGS correspondence so that members like yourself can readily access it if you want to respond or act on the correspondence in some way. For example, if you want to log on to Member Online or onto our app. Rest assured that our member account security requires several pieces of information to be able to access any personal account information. So account information cannot be accessed by using a member number alone. The next question is from Shane. It's important for members to be able to actively engage with their superannuation via any channel. Does NGS Super have plans to provide an improved mobile app? We're always looking at how we can improve our customer experience to make it easier for members to engage with their super. You'll be pleased to know that upgrading of our app is definitely on our digital roadmap. We're currently looking at the best and most cost-effective ways to deliver an improved experience for members through that channel. Doing this will take some time though, but I expect we'll be in a better position to update you at next year's annual members meeting. The next question's from David. With the recent case launched by ASIC against Mercer Super for greenwashing, what actions are being taken by NGS Super to ensure that they are not making any misleading statements? We're committed to transparency in everything we do, so we're also mindful that a statement must present the right information to members. ESG and sustainable investment are open to some debate, so we strive to add as much context to our statements on these as possible. As soon as ASIC's greenwashing guidance was released, we undertook a stringent legal and compliance check to ensure all ESG material complied with these guidelines. Further, any new material on these topics also receives the same reviews. For those interested, our webpage contains some great, valuable information around our ESG and responsible investment policies, how we evaluate investments, and also an ESG perspective. Our progress towards ESG targets is also detailed on the website. The next question's from Michael. NGS is not listed amongst the poorly performing funds in the government's ranking of super performance. Where does NGS sit in terms of that top 10 performance, and what steps have been put in place to lift NGS Super's ranking? NGS continues to take a long-term investment approach, investing in opportunities that we believe will add value to member retirement savings over the long term. We're pleased to have again passed APRA's annual super performance test for My Super products in 2022, and we're on track to passing it again in 2023. We continue to monitor and evaluate our investment process to help to ensure that we continue on this steady path. Now I'd like to go to live questions. The first has come from Kelvin and Margaret. Regarding the recent cyber attack, when will affected members be contacted? That is, what is the timescale for them to be contacted, and will members be told if their data, if any, has been obtained in the cyber attack? Kevin and Margaret, we started communicating with our members on Monday. That included both a general communication to our broader member database, and it also included specific correspondence to impacted members. So again, that process commenced on Monday and will be continuing throughout the week. The next question is from Ramu. Can you provide an update on any new investment options or products the fund is considering offering to members? Ben, would you like to take that question for me?
Certainly, and thanks for your question, Ramu. Looking at investment options is particularly important, and particularly important across different stages of life. We're constantly looking at investment options and improvements to those investment options for our youngest members, for members approaching retirement, and also for members in retirement. One thing that we're particularly focusing on right now in development is investment options for members in retirement. What's particularly important in retirement is to remember that there's actually still a long time for that money to be working for you. So we're looking for investment options and products that ensure that long-term growth. But at the same time, we also need to ensure that when markets do turn, that there is protection on those options as well. So we're looking at investment options at the moment and designing them that have that great balance between longer-term growth and shorter-term protection in retirement. What's particularly important, I guess, in relation to products and investment options is that we do offer default options, and by that I mean options that where individuals haven't made a choice. They may not always be appropriate for every member, so what's important for us is ensuring that we have the right education and tools and advice that we can get out to our members to help them make a choice themselves if those default options aren't necessarily appropriate for them.
Thanks, Ben. The next question comes from Gordon. What happened to the previous CEO and in what circumstances did she depart? Gordon, Laura Wright left the fund last year, or rather retired from the fund after a very long and distinguished career with us. Laura still remains a member and I hope she's watching today. The next question comes from David and Frank. Did the recent cyber attack affect Mercer's systems and infrastructure or just NGS systems? Over to you, Ben.
Thanks. Really important question. And what's most important is that the attack was contained to our internal corporate network. It did not go external to our network, and most importantly, it did not go to the Mercer systems, which is where your money is managed. It also didn't reach other systems external to our internal corporate network.
Thanks, Ben. The next question's from Charlie. Regarding gold bullion holdings, does NGS purchase its bullion through the Perth Mint? Over to you, Ben Squires.
Thanks, Nat. And thanks, Charlie, for your question. And the straight answer to that is absolutely we do. We do use the Perth Mint for access to gold. And the question probably relates to the latest news on the Perth Mint. We've been in constant correspondence with the Perth Mint through this process, and we have high conviction both in the WA government guarantee of the gold in the Perth Mint, and we see that as the appropriate channel for us to gain access to that commodity.
Thanks, Ben. The sectors you have chosen to exit on environmental grounds, how have they performed since the decision was implemented? Now, that's a question from Adrian, and Ben, could you cover that, please?
Yeah, sure. Thanks, Adrian. So in terms of the oil and gas sector, what we've seen is those sectors in the early part of 2022, when we were in the midst of the energy crisis, certainly performed quite strongly. But since that time, they've significantly underperformed the general market, and they've underperformed the NGS portfolio. So by having no exposure to those areas, we've actually been able to generate excess returns. We've also been able to reallocate that capital into areas that we can observe higher future returns in a multitude of different sectors. So there's no shortage of opportunities for us to reallocate that capital into more attractive opportunities.
Thanks, Ben. Now, it doesn't appear to be any further questions. So, in closing today, I would like to thank both Ben Facer and Ben Squires for their presentations and insights. I'd also like to thank the team who have worked behind the scenes to make today possible, including NGS staff and the Coravim team who've been fantastic. I'd also like to thank the board for their support and guidance, and our amazing NGS Super staff for their unwavering commitment to members. Again, thank you for being a member of NGS Super, and thank you for joining the meeting today. We look forward to continuing to be there to help you prepare for your tomorrow.